Hi, welcome back to my channel, Credit Recovery, where we talk everything about credit and getting approved for credit. Today, guys, in for another treat. Doing more reactions here to go ahead and clear up some misinformation as usual. And before I go ahead and get started, anybody that I do a reaction on or correct their the information about credit, please do not take it personal. Like it's not my intention to hurt you, I guess. It's just more of I just want to clear it up, clear up the information to make sure that the information that is out there is all correct. Because again, we all have a mutual goal, which is trying to educate people about credit and about being approved for a loan. So yeah, so anybody again that do a reaction, it's definitely not my intention to point out those things. So I'm just here more trying to educate. So let's go ahead and get started with our first video. All right, so this one, this guy's talking about Navy Federal pledge loan, which I didn't know exactly what that actually entailed, and then we found out it's just a secured loan backed by a certificate of deposit loan. So let's get in here. Got some great stuff to go ahead and learn. So let's do this.
If you don't have a Navy Federal Pledge loan, you're gonna want one after this video. What's up, winners? My name is Nam. If you're new here, welcome. Here we talk all things personal finance and credit, starting out by subscribing so you don't miss out on any future videos. You might have seen this topic on YouTube before if you're interested in building credit, and everybody tells you that you should get a pledge loan. You may be thinking to yourself, maybe I'll get a pledge loan in the near future, but I really don't think that most people fully understand what a pledge loan is and how it can have a positive effect on your credit score. In some cases, you can essentially create your credit profile overnight. So in this video, I'll give you a full breakdown of what a pledge loan is so you can fully understand it and use it to its maximum potential. We're going to talk about strategy, what it looks like, and all the legal details that come with Navy Fed. I think for most people out there, if they have heard of a Navy Federal Pledge Loan before, they just think it as a credit builder account. But it's way more than that. I'm gonna show you why it does not matter if you have good or bad credit. This is even more powerful if you have good credit, because this can fan your credit profile even more. So if you are an individual who are seeking high credit funding or looking to leverage credit, you can literally manufacture a loan which shows on your credit report that shows that you have tens of thousands or even $100,000 loan. Now, if lenders see that you had loans up to 50K or even 100K, they're going to be more likely to offer you higher lines of credit, larger loans, and better financing options. So with that said, this will help you across all financial institutions, but especially if you are a Navy Federal member, you're going to get way more brownie points. Because with this type of strategy that I will be sharing with you, there's a huge difference between having a great credit score and having a great credit profile. Yes, having a great credit score does reflect your credit profile, but the credit profile is the details. This is similar to what a Carfax is to a car. So if a lender looks at your records and they saw you've had large loans that are paid back on time, lender is going to be like, damn, this person is legit. They are trustworthy and they will pay me back. Because the key here is to really fan your credit profile. The trouble with most people when they're trying to seek lending is not that the credit score is not high enough, it's just that they haven't really built a solid profile. Yes, they probably have credit builder loans, consumer finance loans, auto loans, or even a couple credit cards. This will add diversity to your account, but if you're trying to get much bigger amounts than you're used to, then a large pledge loan will help you do that. Because if you were to think about it, credit builder loans generally do not have that high of amounts. Usually it's anywhere between $500 to $1,000, and even most of the time people have large loans such as student loans, they're in deferment or the balance is still too high. This just shows that you have a large amount of debt, which ruins your debt to income ratio when lenders are underwriting. Now in this video, I'll discuss in detail about the Navy Federal program, but there are plenty of other financial institutions and credit unions that offer similar products to Navy Federal. So if you're not in with Navy Federal yet, I do have a playlist right here, which will teach you all the steps. So if you still don't qualify, check out your local credit unions because most likely they're gonna have something similar. So in a nutshell, this is how a pledge loan would work. Let's just say that you wanna get a $50,000 loan. You would have to deposit $50,000 into your Navy Federal account, and then you would have to call them up and be like, hey, I want to get a pledge loan with this 50K that I have sitting in my bank account. They will set you up with a loan using your own money, then they will charge you just a little bit of interest so they can make some money on this trade line. This is just the cost of business, and you gotta put some skin in the game if you want to play this credit game. Once they take that money from your account, that loan amount will go.
It's just not a little bit of interest. Again, it varies based off your credit score. So if you have a really credit score, then your interest rate's gonna be really high. So I wish you would clarify that, let's get back to
right back into your bank account. Now let's take a look at this document that's directly from Navy Federal that discusses certificate pledge loans. There are variations to this, like a share security.
Let's see. You guys can't really see it well, but yeah, this is pretty much a certificate of deposit. What a certificate of deposit is pretty much you put a money into a special account with the bank or the credit union, and you earn interest on it. And normally the interest is not really that high. Right now it is high because inflation is really high, but once inflation's back down, you'll see that it's not really a great way to it. It's a way to be able to invest, but is it the most optimal way? Don't know. I'm not a financial advisor, so I definitely won't speak on that. But credit, I definitely will speak about. So yeah, this is just pretty much what it is. It's just pretty much an outline of what it is. Not really much information about, you know, how to get approved for it and whatnot. So let's say if he goes a little bit more depth into that.
loan, which can be for small amounts with varying lengths, but for this video, I'll just go over pledge loans. So based on this one pager, it says that this program allows you to borrow your own money. Use the principal in your Navy Federal certificates as collateral on a low interest rate loan. The loan's APR is just 2% points higher than the certificate rate, and the certificate continues to earn dividends at the rate at which it was purchased.
My dad was a hard worker. He used
Hello, sorry, let's go skip that.
Familiar with what certificates are, imagine a savings that is locked. So you would have your money locked away, which you can earn interest on, typically at a very small percentage rate, but it's better than nothing nonetheless. So for the eligibility for this program, you gotta be at least 18 years or older, and you can also be the sole owner or a joint owner of the certificate. This is very powerful in the case that you wanna build your spouse's or family member's credit as well. They have short-term certificates, which can range anywhere between 3 to 12 months, and long-term.
That's it for the eligibility. Okay. Let me not judge him right off the bat. So, yeah, let's get back to it. Let's see if he addresses that.
Certificates, which can range anywhere between 3 to 7 years. You can also take out a loan ranging from $1,000 all the way up to $100,000. This is the essential key when it comes to building your credit. The larger amount with the longest terms will benefit the most. I'll go over what you need to know to make this as low cost as possible with the best outcome a little bit later. One thing that they did not go over in this handout is that you will not incur a hard inquiry whatsoever. You will most likely get a soft pull just for identification purposes, but these are harmless. So that's the meat of this one pager. So before moving on to the strategy and the hack, which makes the pledge loan.
How do you know that there isn't a an hard inquiry anytime you apply for any loan? Actual like loan, yes, you will incur hard inquiry. So definitely let me know what is your name? Mabe. Name? I'm sorry if I mispronounced it. But definitely let me know because I do have a curiosity of how do you know it's not an inquiry on your credit? I was like, definitely hit me up.
So powerful, I would like to thank today's sponsor, Bankrate. If you are in the market for actual dollars in your rate, there's an affiliate link down in the description. So here's the strategy. Ideally, you want to put in as much money as you possibly can aside for this pledge loan. Because the goal with the pledge loan is that the larger loan that you can take out or cash that you have available, this will be the amount that will be reported to the credit bureaus. So if you ever wanted to seek higher levels of funding, the amount that you take out as a loan is really going to play a factor. For instance, let's just say that you wanted a $50,000 car loan. If you only ever had $1,000 or even $5,000 loan, this will make it seem like this was the most that you're able to handle, or you just have a thin credit profile. In this instance, you may not get the most favorable terms, or you would have to put down more money for a smaller loan. But on the other hand, if you have a $50,000 loan with perfect payment history on your credit report, lenders will know that you're able to handle large amounts. So for instance, I was actually thinking about getting a 50 or even a 100K Navy Federal pledge loan just so I can build a thicker credit profile. I understand that everybody's financial position is a little bit different, so if you only have $1,000, then go ahead and just do that. But the key with this pledge loan is that you want to have a large enough balance with a long enough payment history. Alright, so once you decide how large of a pledge loan that you want, you would then want to place this money into your Navy Federal account. then you would have to call Navy Federal and tell them like, hey, I have this money here and I want to have a pledge loan with the amount that's in my account. Once you start this process, they'll put that amount on hold and create an installment line of credit using the amount that you set aside. Then within a few business days, they would then give you back that amount into one of your Navy Federal accounts. This either can be a checking or a savings account. So for instance, let's just say that you're a baller and you want to have a pledge loan of $100,000 for 7 years. Once this process gets approved, this information will get reported to the credit bureaus in the next 30 to 45 days, showing that you got a loan for $100,000 with the ending date in 7 years. Now, here's the actual trick to build your credit the way that you want it. There are varying numbers on the internet to tell you how much you want to pay off, but the general consensus is that you want to pay about 90% of this loan off right away. So when I say pay this off right away, I would wait until this trade line actually reports to the credit bureaus. So this can take anywhere between 30 to 45 days. So once you've seen this reported to the credit bureaus, this is when you would pay off that 90%. So this may drop your credit score for the short term, but you want to make sure that this trade line actually reports before you pay 90%.
I like that he did that. He let you know that once you take out this loan, your credit score is going to dip. It is going to dip because what's going to happen is that your amounts owed, which counts for 30% of your credit score through Experian, can't remember through TransUnion, Equifax, but we'll just use Experian for now. So that counts for 30% of your credit score. So it's definitely going to dip. So I'm happy he gave that disclaimer. That's what I'm talking about, baby. That's what I'm talking about. And also, I see that you military behind. Thank you very much for your service and everything that you've done. Doesn't matter how small of role that you did in the military. Thank you for serving our country. Definitely do appreciate it. Wanted to get that out of the way. All right, let's get back to it.
Of it off. So in this example, the $100,000 that you have, this will mean that you would have to pay off $90,000 of the loan that you took from Navy Federal. Then you will leave that $10,000 balance across 7 years. So if you are thinking that you are actually spending $90,000, you are actually not, because this is your money to start with. The $90K will be going to Navy Federal, then right back into your account. You're essentially just moving money from one pocket to another between you and Navy Federal. So across 7 years, you would have to pay back $10,000. Again, every payment that you pay back minus the interest gets released back to you. So that $10,000 is still yours, minus whatever interest fees that you would have to pay. Now you may be thinking, okay, if I took out a loan for $100K, why not just pay off the $100K right away? This way I would have a $100,000 loan on my credit report. While you're not wrong, but the largest factor in your credit report is your payment history. This accounts for 35%. So you may be eager to pay this loan off right away so you can just show that you had a $100,000 loan reporting, but you want to make sure that you've had this loan open long enough for it to actually affect. Ideally, you would want to have this loan open for at least 13 to 18 months just so you can show that you have a long enough payment history. Now, if you were to pay off 90% of this loan,
I don't know. I beg to differ. Why? Because again, this is what I do. Depending on how your overall credit looks like. So if you have a person that has like already like 5 to 7 years of great pay history, that's oh okay. What I mean is just you just paid the loans on time. But if this is like your first new highest loan, then you're gonna want to have it on there for at least 2 years because that is what we can see on our end as underwriters is that we're able to see that 2 year history when reviewing your credit. So I wouldn't definitely, if you are going to definitely follow what he says, I would definitely go at least 18 months, but ideally at least have it for 2 years and then get rid of it. Just because that's enough to establish pay history when it comes to getting loans. Like you don't need to have this loan for. I think he mentioned 7 years. That's really long. Like you don't really need to have all that. That's a lot of interest within that 7 years. So I would say if you want to do it at least 2 years, maybe pushing it, maybe three. Because you got to remember when you go to get a term, mostly what are the terms you see? You see 3 years for cars, 4 years, 5, 6 years for cars. So it's that so it's just that it's like I if we see like a loan like that and it's been paid off the term, we're like, okay, he could seem to handle a 3 year loan or 4 year loan. So the payment history is definitely gonna be very important. So definitely don't take it really lightly to do between I think he said 13 and 18. Don't do that. Go for 24 months. All right, let's get back into this video.
your monthly payments should be very small for the next 7 years. So let's run some numbers here. This is going to be very general numbers. I'm not going to include the interest just for simplicity, but if you were to take out $100,000 for 7 years, your payment would be roughly around $1,200 a month. Now, if you were to pay off 90% of this loan, a $10,000 loan across 7 years will cost roughly around $120.
I also forgot to mention, by not having this loan really open for very long too, it will also go ahead and affect your credit age because once you pay off a loan, ends up tending to dip your credit score because you paid it off. So exactly, you want to make sure that this installment loan is worth it. So that is something also to keep in mind that your credit age can go ahead and be affected by it.
A month. So once you paid off 90% of this loan, depending on how your payment will be calculated, it is possible that your next payment that is due will not be until years in the future, or it can just be adjusted to a new amount. The idea is not to pay off the loan early so you have a long enough payment history. So the reason on why this works is to first understand how the loans affect your credit. The two biggest factors when it comes to loans affecting your credit will be your payment history and the amounts owed. The mix of credit is also a factor, but the biggest factors will be payment history and the amounts owed. Believe it or not, loans have their own utilization. We all know that credit utilization is important and you want to keep this low, but this also applies to loans as well. Normally, whenever you get a new loan reported to your credit report, you generally see a dip to your credit score. The reason this happens is that one, usually a hard inquiry occurs, and second, you have a large amount of debt added to your credit report. You tend to see your credit score the highest when the
See what I mean? A hard inquiry incurs. Like whenever you get a loan, hard inquiries occur. So he just kind of contradicted himself because that's what he said earlier in the video that there's no inquiry. So again, clear it up in the comment section. I would definitely like to know.
loan is almost paid off. So if you were to take out a 100K pledge loan and if you were to pay 90% of it, this will show that you have a 10% utilization from the original loan balance. You also need to know that loans affect your credit score much more when they are open. I'm not sure if you experienced this before, but you tend to see your credit score drop once you paid off a loan. It should be recovered in the next couple of months or so, but it may not be as high as it once was when the loan was almost paid off. So far, I told you what a pledge loan is all about, how to implement it, and why it works. The last thing I gotta cover is that why in the world would you ever want to do this? Don't you think it would be much easier for you to get larger lines of credit, loans?
Okay. Cool. That is it. Wow. I personally, this is my opinion, by the way. I don't think he said enough information about this. He missed so much in this video, and and this is just like what I'm talking about. It's just make sure you provide um accurate information when it comes to this. So this is something he didn't address. He didn't address DTI. So what is DTI? Debt to income. Essentially what debt to income is, it's pretty much a ratio of a percentage that underwriters use to determine if you can repay back the loan, because that is a very important role when it comes to getting a loan, is your ability to repay the loan. It's very important. That's the whole reason we're trying to give you a loan. You got to make sure you're able to do that. So if you have a lot of money that's going to your debt, essentially what happens is that then you can get declined. I was like, I've seen it go as high as 55%, but that was with someone that had a 700 credit score. So it's like, well, that's something that's very important to get, because if we're trying to go for $50,000 pledge loan, like he's trying to explain, like you don't make enough money to be able to repay the loan, it's going to be really hard to scale up to get 50, 75, or 100,000 on your credit report if you can't repay it. So that's something that's very important to remember when you're trying to get for this loan. I was like, gotta find this out, but let me pull up my calculator so I can go over like a small little demonstration of how to calculate your DTI and what it looks like. Okay, let's go back over here. All right, so I'll keep it simple. So let's see if there was a person that made $3,000. Well, let's say if in their debts they pay $1,000. There we go. So it's your debts divided by your income comes up with the ratio. So let's say if you pay $1,000, and this is stuff that reports on your credit report. Remember, this is only stuff that reports on your credit report. So any utilities, car insurance, Netflix subscriptions. This doesn't go in there. It's just credit card, auto loans, personal loans, mortgages, anything that relates. Pretty much you add it up together and enter it there. So once you go ahead and do that, so let's just for example, there's 1,000. Let's see, his gross income is 3,000. This should come up to 30%. Let's see. All right, 33 point 3%. So essentially, yeah, so anything that's from the zero to the right is pretty much the ratio you're looking at. So if it was at 100%, there would actually be a 1.0. That's how you know it's at 100%. So their DTI is pretty much at 33 percent, and that's how you calculate it. So that's what I mean that he needed to go ahead and explain when it comes to debt to income, because that is a factor. Um, let's see. He also didn't go ahead and go over credit experience. That's also something very important. Only because you have $50,000 loan and you put it up against a pledge loan or secured loan using the cash, doesn't mean you're going to be approved for that. Because again, in order for you to get approved for it, you have to have at least the experience to be able to handle a payment that size. Because again, that's what they're doing. They give you one loan off they're giving you a loan payment based off that size. So if you've never had a $50,000 loan, it's going to be kind of hard to scale. So credit experience is possible. So like let's say if you only had a 5,000, definitely try 10,000, and then every couple of years, getting with that 2 year history on there, just keep scaling up higher and higher. Because again, you can't just go in asking for 100,000 if you've never had experience with that. That is something within the underwriting community, especially with consumer underwriters. We never want to be really the first people to give someone a loan that they've never had before, just because there's so much risk. But yeah, that's something very important that you gotta that he should have touched a little bit more base on, was just the credit experience. He also didn't go over the credit score requirements, which is again very important. Only because you have this money doesn't mean that you're gonna be approved for the loan. Because again, it's a loan. There are requirements that you gotta meet in order to get this loan. So if you have a 400, 500, or even 600 credit score, then this isn't gonna work for you right away. You gotta work on your credit, um, to go ahead and get it built up. So I would definitely call your loan officers at the banks, credit unions, or financial institutions, and just be like, "Hey, what's the minimum credit score?" Okay, great. Bet I'm gonna work to get that credit score. Because again, I was like, that's still a factor. Your credit is still a factor because they're giving you a loan for it. So I wish you would have definitely gone over that. He didn't go over employment. That's something also very important. It shows stability that a person is receiving income on a regular to be able to make the payment on the loan. You see how this is like slowly starting to connect. You got to be able to have the money to repay the loan, and then you have to have stability in the job. A person that's just jumping around, left and right, changing jobs, being at a job for 8 months, being there for two, then switching, going for 12 months, being at the next one for 5 months, that really shows instability to us underwriters. Because like you can't hold a job, so how do we expect you to repay that? So definitely having income. When it comes to consumer, they're a little bit more lenient. So I would say anything that's for like 6 months of job history, you're good. A year's ideal, 2 years phenomenal. Though we love that. Um, so that's something he does touch on, because again, we need to be able to make sure that you're gonna be able to continue to paying this loan for the 7 years, like he went ahead and explained. So let's see what else. What else? And then on the flip side to the debt to income, remember by getting this loan, this is going to increase your debt to income. So if you're going to be purchasing a home soon or purchasing a vehicle, or maybe your car breaks down and you want to get a loan for a vehicle, this loan is now going to be counted against you for your DTI. The only time that it won't count against your DTI is if um there's a secret right here. So if you owe less than 10 months on a loan, you can get away with it in the consumer for them to remove that payment and not count it against if you have 10 months left. No, now, if you decide to apply for a credit card, even again, it's going to take into account all these factors when it comes to when it comes to approving you for a any type of loan. So now you have this showing on your credit. So again, be wary about this. If you get this type of loan, just make sure that you're not going to go ahead and be having any any other loans you're going to be getting in the future, because this big payment is going to hinder you from getting approved for other loans. So that's a very important. Let's see. How I would sum this up. If you really want to do this, if you have okay to okay decent credit, so let's say if you have pretty much a 670 and above, I would just honestly just apply for unsecured loan and then put that money, pay off 90%, and then just put the money in a bank account and have it go for 2 years and on automatic payments from a separate bank account, which you don't have access to. Just let the payment come out every 2 months, or not two every 2 months. Have it come out every month for next 2 years, and wow, payment history using unsecured. So in case if you don't have the funds, see if you can get an unsecured loan. Yes, rates may not be the best, but again, you're trying to build credit, so it does take a little bit of money for you to throw at it in order for you to get it to grow. Overall, I definitely wasn't like the worst advice. I just wish he would have touched more and gone into a little bit more depth and talked more about the eligibility, because he didn't go over the underwriting criterias, which is very important. Because again, if he's going to give you advice on this type of loan, he has to be able to give you advice also on how to get approved for this advice. And again, yeah, I'm pretty sure he's not an underwriter at Navy Federal, because I think he would have stated. But yeah, it's like that's just something. Let me see. I have a feeling about this. Let's see. Disclaimer: this video is for entertainment purposes. I am not a legal or financial expert or have any authority to give legal or financial advice. That is something that I catch so hilarious that I see with a lot of um people that are YouTubers that do financial advice. They always give this disclaimer. I'm about it to relieve themselves of the liability. This is how I know that they're not serious, and if they're taken to court, that they can hold it down. Because again, they don't have the experience. So this is crazy. But yeah. Yeah, that's pretty much it. Let's go ahead and hop on to the next video. All right, this next video is about how to fix bad credit score ASAP. All right, let's see. This is from this guy named Steven, something like that. My bad. But yeah, he's gonna tell us how to fix your credit score really fast. Let's see.
Relax and enjoy the video. Now, the first thing you need to do, if you have not done this already, is to run your credit report and see exactly what's bringing it down. Now, in terms of where to start, it's really simple. A very quick Google search will bring up a multitude of sites that will show you how to run your credit entirely for free. In fact, creditsesame.com was the website that sponsored one of my recent videos, and even though they're not sponsoring this one, they are a fantastic service, and I highly recommend them and use them myself. Then, in addition to that, you're entitled to a free credit report every year from annualcreditreport.com. They'll give you actual information about your credit report that's fully up to date every 12 months. So pick one of those options and then begin reviewing your credit report. Now, as a quick side note, if any website out there wants you to pay for your report or score, then I wouldn't recommend doing it. There's so many free services out there that will show you everything you need to know about your credit score without spending a single penny, so I wouldn't recommend spending any money if you don't have to, and there you go, I just saved you $9.95. Next, once you have your report, you're going to be going through and and reviewing it to find out exactly what's impacting your score negatively, and typically it's going to be one of these. Number one, maybe you just don't have enough credit. If you're just building your credit score and you don't really have that much information to begin with, then it's not really likely that you're going to have a high score that quickly. If that's the case, go and watch my other video, which I'm going to be linking in the description, and that's going to show you exactly what to do step by step. The second, probably one of the most common reasons for a bad credit score is, I shudder to say this, a late payment or late payments. This is something that will impact your credit score for 7 years, or basically as long as you're going to have bad luck if you break a mirror indoors. So I'll show you how to fix this shortly. Not the mirror, by the way, the credit score. I can't help you if you got 7 years bad luck if you break a mirror inside, but I can help at least improve your credit score. The third, look to see if you have any accounts in collections. And if you see this, it's pretty bad. This is what happens when you've had such a late payment that the lender just gives up on you and then writes it off as a total loss. Then they go and sell that delinquent debt to a third-party collections agency who buys that debt usually for pennies on the dollar. And usually this is going to happen once you're over 150 days late on a payment. Now fourth, look for any maxed out amounts in your credit report. This means that maybe you have a credit card where you've spent up to the available limit, or you're just borrowing as much money as humanly possible without paying down the balance. Now if this is you, just be aware that your total credit utilization, or in other words, how much credit you're borrowing based off the credit you have available to you, is going to make up 30% of your credit score. So maxing out these accounts is going to lower your score dramatically. Now fifth, look to see if you have any foreclosures or bankruptcies on your credit report. Now chances are you should know if you have a foreclosure or bankruptcy on your credit report, so this should not be a complete surprise. Hopefully, but there are instances where identities are stolen or things are misreported, so it's certainly worth it to go and check just to make sure that everything is as it should. And then from there, you can figure out how best to handle that situation to increase your credit score. So in terms of what you can actually do.
Hey, you ever seen a wealthy person or a wealthy family or a jet owner? Like, I got a jet, I'm sorry, you know. You ever done that?
About all of this, let's start right here with late payments, and this stays in your credit report for 7 years. Now here's how this works. Lenders typically report late payments to the credit reporting agencies once they're more than 30 days late. So that means, for instance, if you have a credit card payment that's due on the 1st, but you forgot to pay it on the 1st and you paid on the 10th, then chances are nothing is going to happen except the credit card company might charge you a late fee, which they'll almost always waive if you just call them up and ask them politely to refund it. But after those 30 days, if you still have not paid it, then chances are, yes, it's going to be showing on your credit report. And in terms of how much this impacts your credit score, it's a lot. In fact, your on-time payment history makes up 35% of your overall credit score. So this one is a very important aspect to cover and take very seriously. Now, if you have a late payment, just be aware that the longer it goes, the worse it gets. Like a 90-day late payment is going to impact your credit much worse than a 60-day late payment, which will impact your credit score a lot worse than a 30-day late payment, and so on. In addition to that, the sooner the late payment, the more it will negatively impact your credit score. So if a late payment happened a few months ago, it's going to be a lot worse than if that happened 5 years ago. Basically, the longer ago it happened, the less it'll impact your score. Finally, the number of late payments you have will also play a role in determining what your credit score is. I don't think I need to say this, but I'm going to say it anyway because you never know. Having multiple late payments is a lot worse than having just one. So if you find yourself in this position, you've checked your credit report and you see that you've just been blasted with late payments and delinquencies, here's what you could do about it. First, pay anything off that's late as soon as possible. Like I said, it only gets worse the longer it persists, so having a 30-day late payment on your account is a lot better than having a 90-day late payment on your account. So make an effort to pay off your bills as soon as you possibly can, even if they're already late. Otherwise, if you just leave it alone and you don't do anything about it, after about 180 days, it's going to be sent to collections, it's going to be a charge-off, and then you're going to have a really bad time. Now, secondly, it's always worth it to try to negotiate the terms of the debt and see if they will adjust your account back to current. This means you could reach out to the lender, and if you're having a difficult time making payments, see if you might be able to work out a payment plan. The reality is that late payments are notorious just for being charged off once they reach a certain point, and then the lender loses a lot of money. So most companies would rather get something than nothing and would much rather negotiate than count it as an entire loss. The third, if you've already paid off the debt and it's still showing on your credit report as a late payment, then it might be worth it just to call them up and see if they could remove it as a courtesy. Now let me make it very clear, they are not obligated to do this at all. But you also know what they say, you could catch more flies with honey than with vinegar, so sometimes just calling and asking very, very politely can go a very long way. So go ahead, write them a letter, see if they'll remove it, and it's absolutely worth a shot. You got nothing to lose. Now fourth, if all of that fails, then look for any inaccuracies in the credit report and in the late payment and then dispute it. Now really quick, here's a disclaimer, do not lie ever. But if you find any inaccuracies in the payment due, in the payment dates, and so on, you could dispute the late payment as inaccurate, and if the company cannot prove that all evidence is indeed correct, they will go instead and remove it. Doing this should absolutely make a huge difference in your credit score over the next few weeks to next few months, and doesn't really take that much time to do at zero cost to you. So once you knock out those late payments, let's go on to the next one. Accounts.
See, this guy. Okay, so when you have multiple late payments or just a late payment, what by just catching up on it is not immediately going to increase your credit score ASAP. Again, that is the name of the video, how to increase your credit score ASAP. It takes years of on-time payments just to recover from one late payment. I really don't know how this guy has this many subscribers about credit, or not about credit, but just in general. And a lot of people have commented on this video. It mind blows me that, yeah, I was like, whenever you catch up on your payments, it's going to take a lot of on-time payments in order to recover yourself from that. It is, as he did stand out a great point. Well, actually, he didn't state this, but the longer that it goes, the more years that pass after your late payments, the less it's going to count against you. So, do you know if that does happen, you need a loan, it's going to be a lot harder to get you approved um for a loan. So, in case you didn't know that, now you know that. Subscribe. But yeah, payment history by just catching up is not going to increase your credit score fast. It's gonna start that process, but it's not gonna jump you from just for paying it. For you to let's say if you lost 100 points, by just catching up doesn't mean you're gonna get 100 points back. That's not how credit works. But let's move on. He's a professional.
And collections, and this stays on your credit report for 7 years. Now, like I mentioned, this happens when you're more than 150 days late on a payment. The bank just thinks, well, we're never collecting any of that anyway, so we're going to be writing it off as a total loss. We're going to be selling that debt to a third-party collections agency for pennies on the dollar, and then it's their problem. And that's usually the point where some third-party debt collections agency starts hounding you on the phone, saying you owe the full amount, and then starts resorting to scare tactics to try to get you to pay it. And that collections is also going to be showing up on your credit report. Now, when it comes to figuring out how to handle this, there are a few different strategies. Now, the first thing you should do is try to dispute it if you see any errors or inaccuracies. Like if you think there's an error on the credit reporting side and that you paid off the debt, but it's still showing on your account, then go ahead and dispute it. Then once you file that dispute, they have 30 days to respond. On the other hand, if you think there's an error on the part of the debt collector, you could ask that they validate the debt to prove it is indeed you that owes the money. Now, they're going to have to prove the validity of the debt and that it's actually yours, and if they can't do that, it is removed. And because debts like this are often bought and sold multiple times over those 7 years, there's a good chance there will be an error along the way that you could seize and take advantage of. And that way you could have it removed and improve your credit score. The second, sometimes you can negotiate to pay off the debt in exchange for removing it from your credit report. Now this one is a bit of a shady gray area because technically if the debt is true, then they should be reporting it as is. But sometimes they also want their money and they will agree to remove it if you pay them. So if that's the case, here's what you need to know. Debt collectors will often pay a small fraction of what your actual debt is and then try to profit anything above that. So that means, for example, if you have a debt of $10,000 that goes to collections, then maybe that debt collector bought that debt for $1,000. So anything above that is going to be their profit. So sometimes that means you can negotiate a $10,000 debt all the way down to a $2,000 payoff and get it removed from your credit report because those debt collection agencies would rather get some money and some profit than not collect anything. So again, it's always worth a shot just to see if they're going to do this. The third, we should talk about paying off a debt collector because it's another gray area, because technically paying off a debt in collections is not really going to improve your credit score. Even though it'll now show as paid, it's still going to be on your report that you had an account that goes to collections, and that will stay on there for 7 years. So if this is the case and you did pay off something in collections, then you could go and file.
What was the point of going through this section if paying off the collection isn't going to increase your credit score? And again, this title is how to fix a bad credit score ASAP. So why would you even bother throwing this segment in? The only valid information of it will increase your credit score, but it won't increase it dramatically, is if you can get them to, if it was an error, or if you can get them to remove the debt, then yes, your credit score will increase. Oh my God, this guy, he's failing me. It's the same thing above, and the thing is with collections, if you have this, again, when it comes to loans and getting approved for loans, this is going to affect you depending on how recent it was. I would definitely say anything within 2 years will definitely affect you from getting approved for almost any type of loan that's consumer. So I would say auto, boat, ATV, personal loan, lines of credit cards, just because collections is a huge deal. It shows that you were never able to, you couldn't pay this debt off. So why would we trust you? So let's jump just right into the next segment. Hello, exit. Let's go to the next segment because this guy.
Fourth, if you have any maxed out accounts on your credit report, then this is usually a pretty easy fix. The credit bureaus really just want to make sure that you're not out there maxing out all of your credit cards and that you're only using a small amount of your overall credit that you have available to you. Ideally, you want to be using under 10% of your overall credit limit so that way you're seen as a safer borrower and therefore you get a higher credit score. So that means if you're out there just maxing out your credit cards, then, well, first of all, don't do that. But second, the fastest, easiest fix out there is just to pay down your credit cards so now you owe less money. That's going to almost immediately fix your credit score within the next week or two without anything else needed from your end. But if you don't have enough money to pay it all down, and this sounds so weird for me to even mention this as a solution, but it is a solution to go out there and open up more credit. Now here's how this works. The credit bureaus don't care about the dollar amount that you're borrowing. All they care about is how much credit you're borrowing compared to the total credit limit that you have. So if you have a $1,000 credit line, but you spend $1,000 on it, then you maxed it out. But if you have a $10,000 credit line and you spend that exact same $1,000, then technically you're only using 10% of your overall credit, and that's good. So one of the techniques that I use with all of this is just to have a lot of available credit, all of them with really high limits. That's going to help lower your credit utilization and help improve your score, all without paying down any additional money. Now please, I beg you, be responsible.
Your solution is for them to go more into debt. Oh Jesus. And this is your guy. This is your guy that you guys, or at least the people that follow him, about credit. Like, Jesus is so bad.
Responsible with this one. I cannot in good conscience go and recommend someone who's maxing out their credit cards just to go and get more credit. So most likely, if you have a spending problem, at least acknowledge that, and the best solution for you is just to pay down the credit cards, and that's going to be the best for you if you got a spending problem. But if you just have a low credit limit to begin with, then yes, opening up more credit and using it responsibly will help your score dramatically. And finally, let's talk about the worst.
Oh, Jesus. All right. So let's talk about this. Okay. So this is how it won't help your credit score, again, increase really fast. If you're in a situation like this, you don't make a lot of money and now you're really tight on money. Let's just use an example. Let's say if you have $500 left from your bank account, or from your bank account each month, and you're trying to pay off that's amounts of debt. Only because you use, let's say, that $500, which essentially now you literally don't have anything. If you throw it at it and you owe like $10,000, that's not going to increase your credit score really fast, which again, it's the principle of this video. He's stating that, by paying down the credit cards, you'll be able to increase your credit. Yes, that only works if you have disposable income to be able to bring down those balance down really fast. So that means you may either need to get another job, do side gigs, find different ways to make money to be able to bring this down so you can really see that effect on your credit score. And yeah eh, so he needed to explain that information a little bit more, is that it's gonna, if you don't have a lot of money, it's not gonna really improve as fast as what you're thinking, because you were able to pay an additional $500 down. It makes somewhat different, but not increase it. It doesn't increase it ASAP because you brought your credit utilization from, let's say, 80% to 75%. So yeah, let's jump into this last one.
Worst from all of them in terms of harming your credit, and that would be bankruptcy and foreclosure. Now here's the thing, bankruptcy is going to stay on your credit report for 7 to 10 years, and removing it is going to be very, very difficult, if not impossible. But as with anything I mentioned, if you can find any errors or inaccuracies in the reporting of the information, then go ahead and dispute it, and it's worth trying. And also, if it stays on your credit report for longer than 7 to 10 years, then that's also worth disputing. The same also applies to foreclosures, which will stay on your credit report for 7 years. If the lender is no longer in business, then also go ahead and dispute it. Otherwise, unfortunately, this is really one of those things you're going to have to work around and not avoid. In most cases, removing either one of these is going to be extremely difficult unless you find an error, so it's more important to work around it and improve everything else that will boost up your score, so that way this doesn't impact it as much. Now, in the past, I made a video on this showing exactly how to build up your credit from nothing and exactly how you could do this step by step, so instead of going and mentioning all of that right here in this video, I'm going to link to that as well down below in the description. And that's exactly how you can fix a bad credit score entirely.
Chances are, if you have a bankruptcy and a foreclosure, it is not a mistake. That is an anomaly. That is like a very small amount of people that end up being in that situation. People that normally fall into those situations are people that have the same names as someone else, and people that have the same names as their parents. So like a junior or a senior. That's where you'll see it common that it will happen. But for the average person, chances are, if you have a bankruptcy or foreclosure, that happened to you. So again, that's not going to increase your credit score. I don't know why he gave that advice. That was such a waste of advice to give people. That one, and is it the collections? Maybe the collections, like the information he could have did without it. So I don't know. I was like, what you guys think? Let me know in the comments. Like, I'm really just genuinely surprised that he would say this advice without really thinking about this. Like, I was like, you can't make these changes without certain things. You can't bring down your credit card balances and unsecured loan balances without having a lot of money if you racked up a lot of debt. But so it's just like things like that, your payment history, how it only because you catch up and you pay doesn't mean that you're gonna get you're gonna get the points that you lost again. So yeah, this video was like kind of a mess again. It was just like the other. It wasn't the worst, but it's just they didn't do thorough information. I think he just kind of wanted to do this just to reach it out there, because again, that's really what I see a lot of trends with a lot of YouTube financial YouTubers. I'll literally see the same information everywhere. How to build your credit score to 800, and they're all say the same information. Comment below if you've noticed that too, because I'm pretty sure I'm not the only one. But yeah, let's go ahead and move. All right, we're gonna go ahead and be doing the last video tonight. We're gonna go ahead and be reacting to a video from Hut of people guessing other people's credit scores. I'm excited. I'm gonna try to guess and see if I get right. Let's see how many I get out of all these people. Let's go ahead and hop to it.
Have you had any experiences that have damaged your credit score?
Oh, for sure. I had an ex
I know where this is going.
Hello.
Hello.
My name is Jan.
My name is Sam.
What are you doing here today?
I am here to guess people's credit scores.
You know your credit score?
Yeah, it's probably like 8, 10.
That's excellent.
Thank you. My mother established credit for me when I was a teenager.
What do you know about credit scores?
Had my identity stolen. My mom opened up a fair amount of credit cards in my name and racked up a lot of debt that was not being paid off. So it really tanked my credit score.
I own two.
Did you see that? One of them had the credit score was well taken care of by their parent. One of them was financially responsible, and there was another one that wasn't financially responsible and damaged their kid's credit. This is why I say authorized users. Why authorized users can be a good or bad thing depending on the parent. That's crazy to hear that finally. Oh, yes. Let's get back into the video.
224 rental units. I look at a lot of credit scores.
How much do you rely on credit scores?
Past behavior is the best indicator of future behavior. And so if I can only look at one piece of data, I'd rather know how they have used or abused their money.
I'm going to hand you a list from excellent all the way down to bad credit.
Okay. All right, okay.
You're going to interview these individuals one at a time. I'm going to ask you after that interview to put them in one of these categories.
Okay.
What's your methodology going to be?
It's gonna be how clean you're dressed. I might do odor, I might do shoes, I might do socks.
Ask them if they're making their minimum payments every month.
How long have you had your credit lines open? Do you own a home? I feel like I'm gonna guess pretty easily.
Are you ready to meet your people?
Well, if they,
Oh, hello. Let's skip that. Shoot.
people, I don't know about the bad.
All right, let's bring our first person out.
We've got a fit.
Talk to me nice, man. Talk to me nice.
This is a trip.
First thing is the grill, obviously. I like it. I almost wore a cap today. Nice, coordinated. All right.
Come on, you see me.
Who taught you about financial literacy?
Nobody talks to me about credit.
Right.
And so nobody was talking about credit, what it does for you, what you need it for.
Right.
Have you had any experiences that have damaged your credit score?
Oh, for sure. Biggest one was student loans. My first couple of years of college, man, just not knowing, hey, I can get more money, check this box. All right, cool. Let me get that. I had to get these people $10,000 back off of $3,000, something like that.
What? Looks very clean cut, has gold teeth. I'm thinking, I'm gonna say 670 to 739, good.
All right. I think she says 670. I say he is probably like he's at least like 650. I'm gonna say 650. 670, 650. Let's see who's right.
Good.
I'm gonna give you a good score, 693.
I know how much they dock you from just checking your credit score. I think your credit score is fair.
They do not dock you for checking your credit score. She doesn't. She doesn't know about credit. What? Okay. Let's continue.
And it's around 600. Am I right?
Okay.
615.
Damn.
Yeah. Let's go.
Did having a low credit score affect anything?
Hell yeah, man. Because of my experience with that, I talk about credit with my students all the time, like every day, because I work in high school. You about to get out here into this world. Nobody was talking to me about
Nobody
credit.
talks
Nobody
about it.
taught me about it. This is why it's important.
Yeah.
So,
Goodbye. Nice
It was
meeting
nice meeting you.
All right.
All right.
Well, something I'll go ahead and list a couple things that having a low credit score will affect. It will affect your insurance rate, which I was mind blown when I learned that insurance rates also use your credit to determine your premium. It's just so that they can it's just so that they can charge you a lot more for it. Obviously you're getting charged a lot higher interest when you have a low credit score. Being approved is a lot harder. You need to come out with down payments, even if it's for a car, ATV, a motorcycle. The lower your credit score, the more down payment that you need to put down for a house. Down payment's going to be important. Your assets, how much of a rainy day fund, the lower you have, the more potentially that you need to put. It's not always the case, but when you have a low credit score, you have to compensate for a lot more than you do versus somebody that has fair to excellent credit. Because again, their credit is reflecting that they're able to pay their loans on time and handle debt in their credit overall. So yeah. So that's a few things about having really low credit score.
Right now.
Hi.
How are you?
Good. How are you?
Jan.
Logan.
Logan, nice to meet you, man.
You too. Like your coat.
I appreciate it. I like your shirt.
Thank you.
Yeah. Did you buy that with a credit card?
I did not buy with a credit card, but I did a Affirm for payment installment thing.
Okay.
Got the blue mohawk and you got the full body tats. People would say that people who get tattoos are fiscally irresponsible.
What do you do for work?
I work full-time in retirement plan services for a financial group. So I basically talk to old rich people all day about their retirement plans.
So you must be good with money though, because you're talking to them about money.
Yeah.
How many times have you been ever late paying a credit card or a personal loan?
Once.
You've only missed one payment. That's really good. I've only ever missed one payment.
When you came in and I just looked at you, I was thinking society would probably say bad. Now you said you work in the financial industry a little bit, so I'm gonna say you're probably very good. 7.
Dude. If you missed one payment, and everything else is good, I'm gonna say he's like in the 720s. That's my prediction. She says 740. I say 720. Let's see if I get it right this time.
740 to 799.
No.
I want to give you a good score, 703. What is it?
704.
Oh, yes! Oh!
I love you.
What the F? What is wrong with me, people? Second one. Don't judge me, alright?
You're everything.
Thank you.
We have
Designer.
a fashion niche stuff here.
Yes, I'm a designer.
What's your gross annual revenue?
My gross annual is technically 40K up.
Okay, got it.
Have you ever experienced any fraud or identity theft? What happened?
Someone charged 6 iPhones on my AT&T account.
Oh my goodness.
I had to file a police report, and I thought it was gonna be all like CSI. No. You
No,
just
they
type-
don't really even care.
No. That's all we're doing.
And did they give you the money back or?
No, they're still hunting me down for it.
Oh, that's intense.
I know.
Since you had that setback and that fraud, your credit score hasn't had a chance to recover just yet. I'm gonna guess 589.
If it's fraud and that happened, and if they're still after, I'm pretty sure she let it go. I'm gonna say 625. Let's see.
Missing by 4 points. Yeah.
Have you done anything to protect yourself since?
I had my credit locked for 2 months thinking that's it. I'm good. But after the 2 months, no. The trouble came back.
Do you feel like the headache of all of that is keeping you kind of
moving forward?
I have a challenge for all of you.
I don't.
from progressing in your business and in life?
Yes. I need more protection.
Yeah. Identity theft is no fucking joke.
Nope.
Let me see that. You got a Pokemon tattoo?
Oh, shoot.
Honey? I'm thinking Pokemon tattoo?
All right, so that's something that I will tell you about how to protect your credit. So yeah, so Experian, I know at least the name with Experian, but I don't remember the name with Equifax TransUnion. But they have what's called a credit file lock, where pretty much happens is that you just lock your credit, and pretty much in order for anybody to approve you for a loan, you need to go ahead and unlock it again. So essentially, whenever we see it from our view as an underwriter, we essentially can't see any information. Pretty much, it just says, to contact the customer's name, tell them to unlock the credit through all 3 different bureaus. Because sometimes you can just do it for one and not do it for the other 2, or maybe you can just lock all 3 of them. And do that. And then if you've been through fraud, like that young lady over there, you can do what's a fraud alert through Experian, and essentially you put a phone number down and make sure it's always the most recent phone number to so then when you apply for credit, essentially we can't underwrite us as underwriters approve a loan if there's a fraud alert that we have not called on. It is against the law for us to do that. So, yeah, that's very important to for us as underwriters to go ahead and call the customers. And if they don't call, we have to decline the loan because again, that's a requirement per the law. Um, but yeah, for fraud alerts, have you ever been through that? I would definitely say about getting a fraud alert and just provide that phone number. It's definitely a really great, safe way to keep your credit there safe. And then I'll put the video to Equifax of the breach that happened a couple of years ago, somewhere up here. Just see it. All right, let's go ahead and continue to the video.
And how old are you?
20.
Oh, 20? I'm thinking bad, 300, 579.
What?
Tell me why.
Okay. The laces.
The laces? Oh, okay, yeah.
I mean, Jesus Christ, man.
Do you feel like a financially responsible person?
Sometimes.
How many times have you missed a payment?
Maybe like 4 times.
623.
If he's missed 4 payments at a time, now he has to be way lower than that. I'm gonna say like 580.
How'd I do?
False. I have a 770.
What?
Multiple missed payments? I don't know.
I mean, it wasn't like I waited for a while. I'd probably only be like a week after.
So see, okay.
You mother effer. How you gonna play me like this? See, this is why people don't know about credit. Oh my god. So it's only been a week late. Of course that's gonna report. You have to be at least 30 days past due for it to report. No wonder I got it wrong. If it wasn't for that, I would have said whatever his number was. So, oh my god, I can't believe he played us like that. Man, ridiculous.
Yeah, typically, it doesn't hit your report until 30, 60, and 90 days late, right?
Oh,
the longer it goes, right. You can be 2 weeks late, you can be 3 weeks late. You're killing
That's
it, man.
good news.
Let's go.
I know, right?
Hi, my name's Andrewselle. Oh my gosh, this outfit.
Is this custom?
No, it is designer.
It is designer,
Yes.
yeah. Okay. You look like you might, see a designer dress that you might like, and if you have credit, you're gonna throw it down. I'm gonna say fair.
Fair?
580 to 669.
How old are you? 25. And do you have any credit cards? Only one, last year. Okay, so we've had 1 year of a line of credit. Technically, my line of credit started at 18 because I did get fraud and an account was opened up in my name. Oh wow. I've experienced something similar as well, yeah.
What happened?
Individuals used my information to buy a BMW that got repoed.
What?
And they said that I was in the 340s, and I'm like, what do you mean? And so I had to build it up from there. You're still rebuilding your credit. So I'm gonna say you're in the good range. That's fair. And I'm gonna say 670.
Okay, so man, it's been so many years. Oh, she's been rebuilding her credit. It does take a lot of years for it to say. I'm gonna go with my another previous answer. I'm going 650. Let's see if I at least get this one right.
Just hit 687.
Nice.
I was in the 324, 340
Jesus.
range for a solid year. I know how hard it is to rebuild it.
Wait, that doesn't make sense. If you got a car repoed, unless it got hit with fraud, and then that's the way she was able to get it removed. Yeah, that's most likely what happened is that it was reported as fraud, and then she was able to get it removed off her credit report because it was accurate. So, but I'm really close, guys. I'm really close. It's not like I can't. It's not like I'm off by hundreds of points.
It's kind of that slippery slope where once you have bad credit, it's really hard to climb out of it. Yeah. Credit is your bloodline.
Yeah, this is a beautiful sweater.
Thank you.
No pills. Vegan Doc Martens. Your teeth are very white.
Oh, thank you.
You're very
I
white.
appreciate that.
So I'm gonna say good, 670 to 739.
Have you ever missed a payment?
Yeah, unfortunately.
Quite a few, or just a few?
A few.
Okay.
Do you have any loans?
A loan that's attached to a mortgage.
What is your income?
It's high.
That's good. So a bank trusted you enough to give you probably $500,000 or more in debt and to live in this expensive ass city. So that's good. Okay. So you must have a good credit score, 714. Higher?
I'm gonna say you're in.
Oh, damn, she took my answer. I was gonna say 750. I'm gonna go 750. No, I'm gonna one up her. I'm gonna go. If you miss a couple of payments, you can't be that high. I'm gonna say 760. Let's see.
In the very good range, 750.
No.
What is it?
811.
811. Well, that's awesome.
What about my
That's a
story?
mixed story. That
Made you
makes no
feel as though
sense.
it was around 730.
That is, again, they're not really giving us a lot of information. I want to ask how long ago it was. Oh, God. I'm not doing good. Again, it's because I don't have a lot of context. Yes, we're going to blame it on that not having a lot of context.
There's nothing about you personally, like you look very well put together. Obviously, you make a decent income and you live in the city, you have your own house. But as soon as I heard multiple missed payments, I just assumed there's no way it could be at 800. It's good enough to get a mortgage, but not good enough to be in that upper excellent range. Most mortgage lenders, if you're above 720, they're golden, right? But 811 surprised me.
Show of hands, how many?
Golden in what way, though? Because it varies. So if he was referring to getting like the best rate, then you don't need to be at a 720. Normally, if you're at like 760, you're considered excellent credit and you'll get the best rate. So it really doesn't matter between 760 to 800 or even just a little bit above. You're going to get the same rate regardless because you have a higher number means nothing. Yeah, I miss a little context from there. So it looks like it is done. So I thought it was definitely a really great video. Questions that I would have asked personally, it would have been like, okay, so the question they asked about, okay, your missed payments, how recent was your missed payments? How many days past due did you go? Do you have any collections? Do you have any charge-offs on your credit? How many inquiries you have? Um, do you have a lot of credit card debt? And then I would ask them I don't know if they would have knew, but I would have just took a shot, would have said, do you know how much in total of balances that you have with your credit? And then how much have you used that up? That also help. Um, Let me see what else I would have asked. Yeah, I was like, the payments will definitely get you. Have you? Yeah, I already said that you've been applying for a lot. Let's see. Your job doesn't really matter at all. Questions like he asked about financial literacy. I mean, like, did anybody teach you about credit? Do your parents know about credit? What is it exactly they taught you? Yeah, so those have been questions that I would have definitely asked. This was definitely very fun. I definitely enjoyed doing this video. But yeah, if you're new to this channel, hit the like, subscribe. I'm gonna have a couple videos for you to watch here next, and then subscribe down here. You'll see it. Don't worry. All right, well, I'll see you guys on the next one.